people jumping out of multifamily, not because multifamily is not the best kind of investment that you should be doing, but because maybe they entered at the wrong time. We don't time the market, we position ourselves so that when the opportunity comes, we take advantage of it. Welcome everyone once again to another edition of Ask the Multifamily Aspect. And today is going to be a very, very interesting conversation. And the reason why it is different is because of the time and period where we are, and it's important that we continually monitor the market and we continually give updates on when and how to go about your multifamily investment. Once again, my name is Bibi Ofiri. If we've not met before, I'm a multifamily investor. I teach people how to be financially free with multifamily, and I hope that one day, if you've not started that or thinking about doing that, I hope one day you will join us in that journey to becoming financially free. So today we'll be talking about the multifamily circle, and this is a very, very interesting topic. And the reason why this is kind of different is because of the interactions I've been having with new investors and the kind of meetings I've been having lately with some people. Some people don't understand that there is a circle in investing, regardless of the fact whether it is multifamily, stock, whatever that is, there is a circle. And if you are not properly positioned, you'll miss an opportunity or you will regret it. That does not mean that we are timing the market, because if you are timing the market, then you'll be disappointed at the same time. But what I'm trying to say is that it's important that you understand the circle so that when that time happens or it comes, you can be able to take a strategic position. Now, some people have asked questions. What is a typical circle? How does it work? How long of a period is that? What is the full circle like and all that? What economists or some people have been saying is that there's a 5 to 7 year cycle, and afterwards it will correct itself. The thing about that is lately we've not been seeing that happen. So many factors, so many things can really spike or trigger a cycle, especially in recent time, like the pandemic in 2018 or 2019. I'm sure no one saw that there was going to be pandemic in 2020. So that kind of changed the cycle, so, and also policies and a lot of things, macroeconomy can also change the cycle. And that is why we are discussing this. What is the implication of the new jobs report to a cycle? What's the implication of low labor due to the immigration policy? What is the implication of the bill that was passed? All these things have a way of either improving or damaging the cycle or triggering a cycle. With the new jobs report that came out, we saw that 70,000 jobs were added compared to other periods, compared to this time last year, even other time. I think so far, June and May is the lowest period we've seen this happen, and that should create some kind of concern. And for those of you that are monitoring the market, that would also create some kind of study or to create the urgency for you to really look at the market and know what decision to take. So that is one of the reasons why we're having this. So the market cycle is typically in 4 different stages. It's more like the bell cycle. So we're going to go through what such would look like. It's divided into 4 different parts, like I earlier said. The first one is the recovery, then we have the expansion phase, then we have the hyper supply and the recession. So today we're really going to be talking about those different stages in a market cycle. This is very important if you're an investor or you intend to invest, not just in multifamily. You need to know when all these periods are. Like you can see on my screen, the first phase is the recovery stage, and the second phase is the expansion. And in the middle, we have an equilibrium. That is, the demand and supply are equal to themselves. That means demand is equal to supply. And right downwards, as if it's sloping downwards, you see the hyper supply. And just at the bottom, you have a recession phase. And this cycle keeps going on and on. So as an investor, at what phase should you be buying, holding, or selling? I think that's one of the main reasons why we are here. Between the recovery and expansion phase is the phase where you should be looking at buying properties. You should be buying assets and all that. The only challenge, especially with the recovery stage, is that most lenders are not lending because, you know why? During the recession phase, which is the phase 4, many properties would have gone into foreclosures and many banks would have been holding on to properties, and it will now go right into the recovery stage. So why there's a recovery stage, there's still some symptoms or atoms of recession still in that earlier phase of the recovery phase, and many lenders are not really motivated to give out monies. They are not really motivated to give out money during the recovery phase and all that. But as an investor, this is the time where maybe you should have been saving money at that time, because lending might seem very difficult. You might have lower leverage, that is, the bank might not be willing to give the typical 70% and loan to value. That is, if your property costs 10 million, the typical standard is, everything being equal, is that they'll be willing to give about 70% of the 10 million. That is 7 million. They might be willing to do that. But in this type of period, you find them not really motivated. That's one. Two, and even if they want to do it, the leverage might be too low. Let's say 50-50 or 40-60. That is, they might be willing to give 40 and you bring 60, or they'll be willing to give 50 and you bring 50. So that means you need to raise more capital at that time because they are not easily motivated. They are going through a period, but at the same time, they also want to take off those foreclosed properties from their book. So some of them, they'll really be looking, the screening process or the requirement process is going to be really, really very thorough and might be very difficult. This experience and those ones that have shown that they know how to operate properties are likely to gain in those periods, especially if you have capital, because you need to have capital during the recovery phase. Now, the expansion phase, what should you be doing? This is a phase where you're riding it. There's going to be an expansion, that is, there's rent growth, concession is very low, things are happening in the community. For an expansion to happen, that is, there must be an economic growth. That is, people are coming into that market, money is flowing into the market, there's an activity, there's money, there's job, there are businesses, things are ongoing, and that is what will boost an expansion phase. That means all these things will need to happen in order for there to be a recovery phase. Now, is there going to be a timeline between the recovery phase and the expansion phase? Nobody really knows that. It can be longer, it can be shorter. So that's why it's important for you not to time the market, and you should always have the mindset of a long-term gain. The moment you have a long-term gain mindset when you are invested, then that changes a lot of things, because you can understand the market and weather the storm. You will know when it's time for you to hold off. You know when it's time for you to start introducing your value add strategy. You know when it's time for you to sell if you need to, or refinance if you need to. You will know when it's time for you to tighten up on your operations. The cycle is going to help you determine that. So in the expansion phase, there will need to be population growth, or there will need to be growth in that market for there to be an expansion. So now, is every market all in the same circle? The answer is no. There are different markets and there are different circles. That is why in my previous videos, or something I've spoken about before now, I've said it consistently: learn to diversify your portfolio. Like for us, currently we're investing in 2 different markets, and we take opportunity of the different opportunities or the different market circles that the 2 market gives to us. Currently we're investing in Dallas, Texas in quotes, and also we're investing in Pennsylvania. Not all parts of Pennsylvania, guys. We're investing in the secondary market, and we are there intentionally because we are seeing the type of growth that are not common in this kind of market. So for example, since late last year till now, we are seeing rent to be flat or negative in the Dallas market, and in some of the Dallas market, not all. So aside from the state market, the market circle is very local. So you can be in the same Dallas and be experiencing different circles. Some parts of Dallas, like the Dallas-Fort Worth area, we saw them experiencing high concessions, high vacancies, and all that. We saw those things happen, or they're still happening. But come to the PA market, what we are seeing there is the reverse. Within the last, should I say 14 months, we've seen an increase from $1,300 to $1,700. That is a $400 bump. And that is happening because of the expansion going on in that local market. So the market circle is local. Don't assume that it's general. That's one thing you don't want to do. You want to study your market and understand the type of circle where you are in. And you also want to ensure that you're diversifying your market. That is very important, so that when one is up, your other one is high, and you can take advantage of different markets and opportunities that are there. So let me move forward. In the expansion phase, that's a period for you to hold off. It's not a time for you to sell. It's a time for you to build value. It's a value add opportunity. Anything you need to do, like building, adding opportunities, holding on to the property to increase value, this is when you should. It's not a time for you to sell. It's a time to build that value. Now, from the expansion phase, when you get to the middle, that's where I have the demand and supply, or the equilibrium point, is when demand meets supply. That is where the market is stable. So when the market is stable, it means that everything is going as it should. But as an investor, it can be very tricky because some people might think that this might last for too long, or some people might assume that it's a bubble, so you need to also be very cautious. And also, that is a period, if I were you, or I'm an investor, so once we get to the demand and supply equilibrium point, it's a period where I am monitoring the market very, very well. And the reason is because I want to know when there's an high past supply, because that will give me a signal that it's time to sell. For those of you that are in a short-term play, that is, you have a 5-year plan or 7-year plan and you don't intend to hold for 10, 20, 15, 25 years, then this is very important for you. For people that are holding in a very longer period, there are some of the opportunities you might not want to take advantage of because you might not be willing to sell. But if you're not willing to sell, you might be willing to take advantage of increasing rent, because during the expansion phase, it's a time whereby you can start increasing rent. Rents are high and all that. So depending on where are you in your spectrum, that is what kind of results that you'll be looking for. So if you're in the equilibrium stage, that is when you should start monitoring when there's an high flux of inventory. So the hyper supply means that there is more supply than the demand for it. And that is a period where you are literally selling. If you have a short-term plan, that's a period for you to start selling off, not for you to hold off at all. So it's a period for you to sell, refinance if you intend to do that, because you should have already built up value at the expansion phase for you to take advantage of that opportunity. That when the market is at its hyper supply stage, you're exiting, because at the hyper supply phase, you start seeing increasing vacancies because you'll be seeing a lot of properties, inventories coming to the market. So every property that we buy, we do this market comps or market survey. We want to know the number of inventories that are going to come into the market, and we want to have a short and a long-term plan. So when we are looking at the report, we are looking at the inventories that have landed, that are currently in the market, and the ones that are anticipated to come in the next few years. And we are looking at what would be the implication of that, especially if we take into cognizance the kind of asset class that we're operating in. Before I continue, for those of you that are just joining us, this is a period for you to ask questions. It's not a period for me to keep talking. I only talk when no one is asking questions. So it's important that you're taking advantage of it. If you have a property or you want to know something more, it's important that you just raise up your hand. If you want to speak, we want people to hear you, we can bring you to the panelist stage, then you can speak. If you just want to type in your question, we have the Q&A section for you to do that. The bottom line is we want you to ask questions. And if you're just here to learn, welcome once again. Okay, we are currently live on Facebook. We are live on our YouTube channel. If you can access, you can go to YouTube and look for BBO Fury. You'll see us right there. We are always on all the platforms that will be shared in some minutes every day. And what we are doing, it's not as if we are being paid for it. It's not as if it's going to add anything to us, in the sense that it's not going to give me more money to do my deals. No, that is not the idea. The idea is we want people not to make the kind of mistakes that we made. We want people to go in with the right information. You can literally avoid mistakes if you have the right education, or limit the kind of errors you will make. And this is why we are doing this. For me, I'm giving back to my community because this takes time from me. I have a lot on my table. I have a new deal, like you guys know, that we are currently executing our business plan. I have a lot going on. My kids are here. I had to even tell them, give me 1 hour of your time. I don't want to see you downstairs. So there's a lot of things and sacrifices we have to put in place for this to happen. And if you're not taking advantage of it, it's not motivating for us. We might just close down the shop, but we'll not do that. We still want to empower people and all that. So these are different platforms we are on LinkedIn, BBO Fury, on YouTube, BBO Fury, and on Instagram, blue_MF group, and on Facebook, official Bibi Ofiri as the Facebook page, then Blue Ocean Multifamily Group as the group. So these are the platforms where we'll be posting if we have any new opportunities for you to be part of. I remember in February we did an event and we were blasting it through all our platforms, and guess what, 5 people took advantage of it during that time. 2 of them are on my current deal for free. They are GPs on that deal even without investing a dime. Why did we do that? We did that to empower people to start up on their multifamily journey and to see that it's not a bed of roses, and to learn from us directly, because we practice what we preach. And the 3 other people are like a fly on the wall, and what they're doing is they're learning the ropes, they're learning everything, and it's up to them to decide if they want to go ahead with multifamily. Because let me tell you, multifamily is not a shining object. It's deeper than what we think it is. It's a business and you need to treat it like that. On those platforms, those are the places we can give you those opportunities. So if you're not following us, it's on you. You know, you never can tell when we'll come up with our next open opportunity. So let me go back to the circle. Like I said, the hyper supply is a period where you should be thinking of refinancing or exiting, because it's a period where there's an influx of a lot of inventories, a lot of multifamily properties coming in. And guess what? Maybe your property is old and all that. You might be faced with very stiff competition. So it's a period for you to like exit if you intend to. Then the last one is the recession phase. Now, in the last 2 years, we've been talking about recession. Some people will tell you that America is not in recession. Some people will say, in short, we're already in one right now. And truth be told, the signs are all out there. It feels like we're in one. And you look at it again, it feels like we are not in one. Maybe we're in inflation stage. Like with the recent job report that came out, it feels to me that we're in stagflation, meaning increased unemployment and inflation. And the most difficult part of it, or the sad part of it, was that it's literally man-made. We are kind of seeing inflation. Things are higher than normal because of the tariff. And for the unemployment, so many things are factors to it. The Dodge cut, the uncertainty, many companies are not willing to employ people and all that. All these things have the ability to change a market cycle, literally. So if we're not supposed to see a recession, then it's not becoming more obvious that that might be the path. And if we're not supposed to see inflation, because we're about coming out of one and we're seeing it tick up, that should mean something to you as an investor. So this is not a time for you to just throw your money and not understand where the market is at. So the recession phase is a phase where you hold, except you have to necessarily sell, then you sell. It's a period where you have to have a lot of reserves, because you are likely to have increased expenses during that time, low income, high vacancies happening because people might not be able to pay their rent and all that. So this is where your reserves, maybe the reserves you've been keeping for a while, will now start coming into play. But this is a time for you to hold. And you can only hold if there is money. If there is no money, this is where you see people doing cash call. Cash call is when a sponsor goes back to the investor and say, guys, you all need to contribute more money. We are low on cash, and for this property to stand the test of time, we'll need more money to see it float. So these are periods you see that happen. These are periods where you see owners saying, in short, I'm done. I can no longer hold on to this property. I want to sell. So these are those periods where you have to have some reserves to weather the storm during those periods, because the economy is going to do its thing. And that is also a period where those people that are into construction are already completing their construction. So not just that there is hyper supply, there's also recession. Those periods, what are the things you should be taking note of? You'll be seeing high vacancies, high concessions, and all that. And all these things are local. It does not mean it's happening in your market, and it might be probably happening in your market. You just need to know when to do that. So if you're into value add is maybe you buy a property and you want to increase, maybe renovate it and bump up rent, or you bought a property and it's not stable, and your business plan is to make it stable with your different business plan strategy. In order for it to be stable, maybe you bought it at 38% and you intend to bring it to 95% within a period of time. During those periods, the amount you'll be receiving when your property is at 38% versus when your property is at 95% is going to be massive. So that is a value add, because not just that you've increased the income coming in. Multifamily is based on performance. The higher the net operating income, that is, the more the income and the lower the expenses, the more the value of the property property. So if you're into that kind of business plan, the period where you should be doing that is between the recovery and the expansion phase. That is when you should be buying those properties, putting in the value add, and when you need to refinance or sell as a phase 3, and when you need to hold off and weather the storm is a recession phase. So I don't know what market you are in or what circle you are currently in, but this is an eye-opener for you to understand. Now, can you literally buy in every circle or sell in every circle? Yes, we have the standard, just like I've explained. Yes, you can do that, but it's important that you have the right experience. If you're a very experienced investor, yes, you can understand the market and know how to play it, because most times experienced ones, not all, most times are long-term players. They know that it's a long-term goal, so I can go through multiple circles and weather the storm, or I can be very strategic. If I know that there's going to be recession in 4 years time, I can start doing a monthly reserves, like I'm going to be reserving some funds so that when that time comes, I have more than enough to weather the storm. A novice or a newbie might not be able to understand it and would just want to jump in and jump out. People jumping out of multifamily, not because multifamily is not the best kind of investment that you should be doing, but because maybe they entered at the wrong time. So let me give you a simple example. In 2021 to 2022, that was the hyper supply period. That was the period we saw the market at its peak. So we're between the equilibrium point. In short, I will not call it equilibrium point because demand was not equal to supply. We had more demand than supply. So I will call that the hyper supply period. We saw people hesitant. People were selling, people were refinancing. If you understood the circle, that's a period for you to have done that. Like now, I remember during that period, I've always given this example in my previous webinars. And one of the examples I gave was that during that period, one investor was trying to sell his property. His property on a normal day would have cost 9 million or lower. But because the market was at its peak, prices were high, the property would have sold for 11 million or 10.5 million. But because the guy did not understand the circle, he withdrew the property from the market and said, oh, let's wait a little more and we're going to sell in 1 year time and we'll get as much from the property. Now, did he time the market well? No, he didn't, because just right after that year, the next year, which was in 2023, we saw the Fed increasing interest rates, and that increased cap rates. Cap rate determines the value of a property. When cap rate goes up, it can go up due to interest rate going up. Because interest rate was going up, we saw cap rates going up. It meant that properties were reducing in their value. So we saw properties that people bought for, let's say, $1 million. I'm talking about single family, now dropping to about 750 or 800 because they bought it very high up in the market. We saw that happening. Back to what I was saying, 1 year later, he brought the property back in the market. Guess what? Even at 9 million, it was a struggle. He wasn't even getting offers for 9 million. So you need to understand the market and know what exactly you need to do. So if you look at my screen, these are real life examples. So in 2008 to 2012, we saw a recession. That was the meltdown, the almighty meltdown. Multifamily prices dropped and smart investors were picking up distressed assets. So you might say, oh, BB said recession time is not a time for us to buy or sell. Like I said, if you are an experienced investor, you will take advantage of that opportunity because you see a lot of distressed properties. You see people literally dropping the key and just saying, I'm done. Whatever it is you want to do, do it. I'm done. You see that happening. And if you are well positioned, that is, you have the funds, you have the experience and all that, that will be a time for you to pick up assets. This is not for newbies. If you're a newbie, please stay off this stage. Then 2013 to 2018, we saw an expansion. This was when there was rent appreciation. If you bought your properties between 2008 to 2018, you would have seen a massive growth, because if you have bought it during the meltdown period and you're able to do the value add strategy and improve on the property and you took advantage of the expansion and phase, I'm sure you cashed out. That was the period most investors made their money. That's the period that made some investors billionaires. When I mean billionaires, I mean billionaires. And this were the period some investors became millionaires. And that was because they took advantage of the opportunity. And we are around the corner for that to happen as well. You need to pay attention to the market. Now, in 2019, 2021, we saw a late expansion to hyper supply. This was just right around the pandemic period. period, there was an expansion to hyper supply. New developments were wrapping up. We saw buildings were being released. Yes, that was the COVID period, but we saw the market had some development things wrapping up during this time. That was a signal. So in 2020, 2021, 2022, we saw a lot of refinancing. We saw a lot of sales. These things happened between the ending of 2022/2023, even to date. We saw interest rate hikes, slow growth. We saw the Fed, because there was a lot of inflation, we saw the Fed increasing interest rates, and that will move the market to a slow or a standstill, because when there's an increased interest rate, people tend not to buy because of the mortgage that they'll be paying on those properties and all that. So this cycle just literally happened between 2008 to 2023. We are currently in another cycle, and depending on your market, I will tell you for a fact, some markets are experiencing hyper supply. Like in the North Dallas, we are seeing a lot of properties, both single families, multi-families. It's as if they are just blowing them in, just throwing them in. One week we are driving past, the next week you're seeing a structure and you're like, when did this happen? In that market, there's already an hyper supply. And if you're currently in that market, you should have exited, like refinanced or sold by now. Whereas in another market, in the same Dallas, we are seeing some form of recession. We are seeing low rent. We are seeing high concessions. There was a property I drove by. I saw concession for 4 months. Imagine you renting a property and you're seeing 4 months concessions for one property. That is crazy. On other markets, we are seeing recovery. So you just need to do your market survey, your market research before you even think of buying into any property. Currently, we just closed on a deal and we have very few slots for any investor, if you're an accredited investor, because the 506C for accredited investor, for you to join us in being part of your multifamily journey. So on this particular deal, like I said, I buy in all circles. It just depends on what the deal is and what the business plan is. When properties were high, I bought, but I didn't buy them in those very high prices. I was looking for sellers that are motivated. So I bought off market. The other one, I bought it below what the market was saying. So it would take someone that is experienced to do all that. And those properties to date are one of my best performing assets, despite the fact I bought them when the market was at its peak, So it's not for everyone to do that. Currently in the market where I am now, it's between the recession stroke recovery stage. It's a period where we are seeing high concessions, and you'll be wondering, why is BB buying during this period? Because that property is a value add strategy. When there's an expansion, which is going to happen, because expansion, like I said, happens when there is increase in people, because it's people that will determine the growth of a market. There's increase in job. In short, the economy is working. That is when you see that happening. And if you've been studying, you're seeing a lot of people migrating to the Dallas market and all that. So I'm aware that that will go off. So right now we are picking up properties because we're seeing them lower. The property that we bought was literally 2 years ago, 16 million. We bought it 11.915 million. You can see what I'm saying. So we took advantage of the timing to pick it up. So if you're looking for a deal to invest in, Tom Manor is our deal that we currently have. We've closed on it. So we have very limited space for you to be a part of. And if you want to jump into it, you can send me a DM on my Facebook, on my Instagram. I am there. If you have my number, you can also send me on WhatsApp and we can book a call. Normally, we always put a calendar for you to book a call so that you can understand it better. But it's important that you take advantage of an experienced operator, someone that's been in it for a long time and understand, not just been in it for a long time. Don't get me wrong. Some people might have been in it for a long time, but they know nothing about it. So it's not just for you to be in it for a long time, understand the market, you know how to operate, you are good at what you do and all that. Those are the kind of people that you should be investing with. So we have the opportunity open. It's a limited time. Don't ever say that it's going to be open for too long, because one, we've closed. So what we are raising for is just a very small amount of money. So take advantage of it. I don't know if there's any question. Does anybody have any question you want to ask? Now is the time for you to raise your hands and ask those questions. I'm going to answer some of the questions that we came up with. Thank you all for staying towards the end. We are almost done with this session. My first question, since nobody is asking, you still have the opportunity to ask. I'm just asking this because no one is asking any questions. at this point. Why market timing matters. Briefly explain what a market cycle is. I have explained it to you. Highlight the importance of timing to maximize returns and minimize risk. We don't time the market, we position ourselves so that when the opportunity comes, you take advantage of it. Do not time the market. It's important that you don't, but position yourself so that when the opportunity comes, you take advantage of it. The next question is, during the expansion phase, understanding the phases of the multifamily market cycle. So what are the key economy indicators and data to watch out for in a market cycle? Yes, so it's not just for you to say, okay, there are market cycle. There are indicators that should prompt you to know that something might happen soon. One of them is the rent growth and trend. You need to monitor the rent growth. Is it growing or is it flat or negative? If it's growing, then you should know that we are between the recovery stroke expansion phase, or let's say the expansion phase literally. If it's declining, then you should know we are currently at the end of the hyper supply / recession phase. If the occupancy rate is trending upwards, that is, we have less vacancies, more people on the property, then you should know we might be in the expansion phase. Some other key indicators are the employment and wage growth in the area. So that is why the job report is very important, and I don't take it lightly. I want to know what exactly is happening in the market, how many people were employed, what is the wage growth, what are people earning, because that will determine if there's going to be a recession, guys. The next one is new supply pipeline. Are people building? We are seeing a slowdown in some markets on construction because, one, interest rate is high. Two, the tariff. Most of these items are imported. Some people might not be able to afford that because it might change the entire cost of building that property. So we're seeing a decline in that. But when you see a growth in that, what does that mean? I've explained that to you. Interest rate and lending environment. So we are seeing that the Fed came out 2 weeks ago and said that they're not going to reduce the interest rate despite the pressure from the administration. What does that say? Now that they did not increase it, what does that mean? And when they reduce it, what would that also mean? When there's a lower interest rate, it means more people are likely to buy. So you might see more demand coming up and maybe less supply because people want to buy and take advantage of the low interest rate. And before you know it, the inventories might be lower. The next one is local economy drivers like major employers, population shift. Like I said, we are in a chartered territory. So many things are happening by the second, by the day. We've been waking up to new news. So every day I'm trying to listen to the news. What's going on today and how will it affect my investment? Before now, it was not like that. We literally have to maybe wait for 1 month before something we hear another new. But now it's every day something must happen. And the next question I'm asking, oh, how is it affecting my deal? Or what should I start advising my property management company to start doing so that we can mitigate the risk? Like when we're doing the election, we had a plan for if it was this person that won or this other person that won, what were the strategies that we'll take? We had different strategies for them. So right now, the same thing. It's just that what is happening now is keeping us on our toes. We have to constantly, we are dodging bullets like every time, trying to ensure that the properties are operating well. And if you're not experienced and you're just jumping in, I don't know, you can figure that out yourself. That's why we're giving you the opportunity to join us on our deal before the door closes. Since there's no question, I would like to call it a day. Thank you all for taking out the time to be part of this webinar, and I will see you in the next 2 weeks. If you've not subscribed, please go right to my YouTube page and like and subscribe. Thank you all and have a wonderful day.